course, this could be, Mark, a case of buy the rumor, sell the news. If investors were expecting you to come out with good results and now they're cashing out on that, what do you think you need to tell investors in order to get them to bid up the stock?
Well, we're giving a confident outlook on 2019 based on a very good 2018 result. So we have seen broad-based growth across all regions and all sales channels. We have seen especially strong growth in Asia Pacific, very resilient also into the fourth quarter, and also the important e-com channel, both on our own website but also on digital concession with partners. We have seen a strong acceleration of growth throughout 2018. So we are quite confident that 2019 will be the first year where we will see an overproportional growth in earnings compared to sales.
Good to have you with us, Mark. I want to ask you about something you told us back in November. You said that the first quarter was going to be the first scorecard to demonstrate tangible progress against your targets. How do you think you've done?
Well, it's a 2022 plan, and 2019 is the first year to deliver against that. So the first quarter, we see some momentum, as I mentioned, carrying strongly into 2019. So we continue to see good results in our e-com business. However, we also see the first quarter 2019 as the one with the toughest comp compared to 2018. You might remember that a lot of consumer goods brands benefited from the tax breaks executed in the U.S. in the first quarter. We had a double-digit like-for-like growth in the first quarter 2018, which is clearly elevated base against that. However, on the total year, I'm very confident that we will see good progress in growing our top line, our earning stronger than our top line, which we expect to grow at a mid-single rate in 2019.
How high is your level of concern, Mark, about the slowdown in the Chinese economy? I know you sell a lot of suits down there. Have you seen it affecting your sales, or do you expect it to be a weak point this year?
No, we have seen, we have a confident outlook on the mainland Chinese market or Greater China in total, because we see that we are benefiting from a very unique price positioning, which is now repatriating a lot of consumption from Chinese consumers. So we were very confident that we have seen no decline in our fourth quarter momentum in the Chinese market, and we are also very happy with the performance we have seen throughout now the ramp-up and execution of Chinese New Year. So this remains our single biggest opportunity from a market perspective. As we recall from our November meeting, we expect to increase the share of Asia by more than 5 percentage points of total sales over the next 4 years, and I see ourselves on a very good track to deliver against these objectives.
Mark, you obviously sell a lot of suits. We've recently seen some renewed or a change in guidance over at Goldman Sachs about what employees of that particular Wall Street institution should be wearing to work, less of an emphasis on formal dressing. If that continues to become more of a trend than it already is, how much of your business will be suits in the future?
Well, honestly, we see ourselves as a big beneficiary of such trends because especially your male colleagues will move away from the uniform pieces. Dressing smartly becomes far more sophisticated. So these customers are increasingly turning to Hugo Boss, especially to our Boss core brand, because this is a brand that will help you to dress a suit also with a cool, casual turtleneck sweater. What is the right sneakers to combine it with? So the sophistication of smart tailoring, which is the core of our business, is a very strong strength of our company, which we are benefiting with this looser regulation when it comes to dress codes also in professional environments.
You've seen this, I mean, you're quite young, Mark, but you have seen this in history. There are cycles of companies requiring employees to dress more formally and then to kind of casually cool it down a little bit. When was the last time you saw this kind of cycle in the finance industry?
Well, you're right. We have seen these trends going back and forth, but I would see this as a longer-term development. So I don't see us returning to the very strict dressing rules that were still prevailing maybe in the early 90s. There's a new generation now entering the workplace, and they've grown up in social media. So for them, the way they look is very important, and we're also an employer in this industry. We have to adapt to that. These rules are less stricter. However, there's a very strong focus on the sophistication on the product in terms of material. One topic we didn't discuss, the aspect of sustainability of product is of increasingly importance, something that we also see enormous potential in our collection. And people just want to look smart in their outfit, be it male or female customers, and this is exactly the great business opportunity for us.
Yes, I remember last time we talked to you, Mark, we discussed shoes, sneakers made out of pineapples, so that was interesting. I know you produce a lot of garments over in Turkey. Any plans to change your manufacturing bases? Any plans to bring more manufacturing back to Europe because of the political troubles and the volatility in markets in Turkey?
Well, we've seen a very stable environment for us in Turkey. So from our production, sourcing, distribution aspect, we have not seen any effects from the political tension that, from my perspective, also have cooled down a bit compared to 2018. What we see, however, and I think that's a more important longer-term aspect, as the industry is trying to become quicker in their ability to react to fickle market trends, we do see that production will come closer to targeted markets. So there is already, with a higher share of automatization in our industry, a tendency to go, I would call it, near shore in production. And we're benefiting from that also because Eastern Europe, Turkey, North Africa are all production markets, sourcing markets for us, which are much closer to our core European market. So the relative share of Asia, I would expect over the next years rather to stabilize or slightly decrease because new technology will move production closer to the markets.
Mark, let me ask you, first of all, how happy you are with inventory levels. I think investors were a little bit concerned about that in the last quarter. And how many stores are you going to open in net terms this year?
Well, the inventory situation has improved clearly in the fourth quarter compared to the situation we had in the third quarter, which raised some eyebrows from investors. And I think this has also been visible in our gross margin development, which was not affected in the fourth quarter by any inventory write-downs. Our clear objective for the year 2019 that we also highlighted on our guidance this morning is that we will further improve our inventory levels. So we see further room to improve, which is also helpful to our cash flow development. The other element you touched on, which will affect our cash flow development, our renovation and new openings. Also in 2019, the vast majority of our retail investments will go into upgrading, renovation, relocation of existing spaces. There's an important renovation of our biggest flagship store in Champs-Élysées in the planning for 2019. But there will be also, especially in Asia, some selected openings for the Boss and the Hugo brand as we grow our footprint in this region.